What's up, my fellow wealth creators? Matty Ice here. Welcome to my mini series, I guess we can call it, where I will be addressing the claim that whole life insurance is a scam, which obviously it's not. It's just a ridiculous thing to say. Just because something doesn't fit your narrative or something you don't like, calling it a scam, I just don't think it really serves anybody, and it's pretty ridiculous. So we're going to be addressing that claim. Now, the video that you're going to see throughout this series that I'm breaking down, I originally, when I went through it, it took me almost an hour to get through, because there were just so many half-truths and misleading statements, and actually some things that I agreed with this gentleman on, where there are some things that you do have to be careful for and watch out for when it comes to whole life insurance. But that's really the case with any financial product. It's not just whole life insurance. But my frustration is this claim that it's a scam, when it's just a financial product, guys. And it comes down to whether or not it's a good fit for you and your situation. And also, are you designing it right? Are you working with, which comes down to, are you working with the right person? Are you utilizing it correctly, right? But to call something a scam just because it doesn't fit your narrative is, in my opinion, a disservice to people who might actually benefit from it, right? So my goal with this mini series is to give you guys the other side of the story that this gentleman is talking about, so that you have the information you need to make the best decision possible. That's really it. All right, so I will link down below. What I'll probably do is make a separate playlist for this entire series. So I will link that down below. I don't know exactly how many parts it's going to be. It might be 3 or 4, maybe 5 parts. I don't know. But I will have all of those videos in the playlist. Make sure you watch all of them, again, so you have all the information about something like whole life insurance. You hear the bad side, you hear the good side, and obviously continue doing your research, and then make a decision as to whether or not it makes sense for you. Because I can tell you personally, it's been amazing in my life. It's certainly not a fit for everybody, but you don't know that unless you have all the information. All right, so enjoy the mini series, and I'll talk to you soon. And here's the thing: if you want to have a conversation about some of the red flags to watch out for if you're considering something like whole life insurance, we could have that conversation all day. I talk about a lot of those things on my channel. But it's just like any other financial product. Just because some, sleazy agent or advisor or even company or whatever is, it could be completely misrepresenting the product. They don't know what they're doing, etc. And it ends up hurting people, unfortunately. It doesn't mean it's a scam. I've actually seen whole life policies that were not set up correctly, and they were pretty detrimental to the person's finances. It's very frustrating to see that kind of stuff. But that comes down to the agent and advisor, and sometimes the company. It's not the product itself. Because I can tell you from firsthand experience that dividend paying whole life insurance, it can be freaking amazing in an overall wealth building plan. It's completely changed my life. And, I talk a lot about the infinite banking concept and using my policies to accelerate the wealth building process. I've consolidated super high interest credit card debt for some of the people in my life that I care about very much, to put them in a better financial situation. And so, these policies can be extremely powerful when you know what you're doing. Also, if it actually makes sense for you in the beginning, right, from the get-go, does it make sense for what you're trying to accomplish? But then when you design them right, you utilize it correctly in your life, it can be pretty freaking amazing, right? But just because it doesn't fit your narrative, it doesn't make sense for you, whatever, it doesn't mean it's a scam. Just like really any other financial product, like index universal life insurance is a great example. I can't stand index universal life insurance, IULs. For a number of different reasons. It's no secret. I've talked about it a lot on my channel, but I don't think it's a scam. In fact, I've done a video on my channel defending IUL from that claim, even though I can't stand IUL and it doesn't really make a lot of sense to me. That doesn't mean it's a scam. It absolutely has a place in some people's financial or overall wealth building plan, right? So just because you don't like something that doesn't fit your narrative doesn't mean it's a scam. And I think it's a disservice to people to call these things scams when they're just financial products, because you're only telling half of the story. Now, there's some things that come up as red flags that I think people should be aware of in this video, as you'll hear, and we'll call that out. All right, I could talk about that all day. However, what I want with this video is for you guys to hear the other side of the story, because he's talking about how bad it is and all these things you got to watch out for, which some of them are true, some of them are not. But he's not telling the other half of the story, where talking about all of the incredible benefits that you can get from this as well. So that's where I want to kind of balance it out. And the point of it is so that you guys have the information you need. You've heard both sides of the story, so you can make an informed decision about whether or not something like this makes sense for you. Because you only hear half of the story. How do you know if it actually could be a good fit or not? And it's the same thing if you only hear about all the amazing benefits of something like indexed universal life insurance, which, that's why it's kind of like spreading like wildfire, because agents, advisors, the companies, whatever, they only talk about this upside potential and tax-free retirement, upside potential, downside protection, all this tax-free retirement income, blah, blah, blah. It's this amazing product. They don't tell the other half of the story about all the things that can go wrong, right? They kind of sweep that under the rug. So again, these things aren't scams. You need all the information to make the decision, right? So let's go ahead and get into it. Let me share my screen and we'll have some fun. I think this is going to be very beneficial. All right, so the video is called Whole Life Insurance Scam, What the Salesman Won't Tell You. Rich on Money is the YouTube channel. So if you want to watch the video on in your own time, feel free to do so. All right, it's always interesting to me that everybody who sells whole life insurance, it's only people who sell whole life insurance, nobody else. Those are the slimy salesmen, right? And here's the thing: are there slimy salesmen out there? Absolutely. But that's the case for pretty much every single industry. So just because somebody sells whole life insurance doesn't automatically make them a slimy salesman. But whatever. I've been called worse, I suppose. So let's get started here.
Some slimy salesman is trying to convince you that a whole life insurance policy is the path to wealth and a secret of the ultra rich. Prepare to find out what's really going on with whole life insurance and their shady salesmen. So what the hell is whole life insurance? I'm going to give you the 3 main characteristics, and then I'm going to rip it all apart, revealing the truth behind their exaggerated claims. You'll also find out what you should do with your money instead of buying this crap. Number 1, whole life insurance is a lifelong benefit. You've probably heard of term life insurance. You make a small monthly payment and you would get a death benefit, for example, $1 million if you die. But typically that policy ends at a certain age, maybe like 50. That's why it's cheap. With a whole life insurance policy, your $1 million policy never ends. If you die in the first week you have it, or at 90 years old, you still get the $1 million payout. Hell yeah, that sounds attractive, right? It's actually not. We'll get to why later. Number 2.
I would say it is. And as we continue, we'll address his specific reasons why he thinks that's not a lifelong benefit. But I want to start with a few reasons why it is. And to give a little bit of context, not context, but some framework here, I think is like an important part of whole life insurance that people often aren't aware of, and it's not often talked about by people like this who are very strong advocates against whole life insurance, is that you actually don't have to pay into a whole life insurance policy for your entire life. I didn't know that when I first started down this journey. It's very similar to a mortgage where when you pay off your mortgage, you still own the house. Pay off the mortgage on your house, you still own the home, right? It still continues to grow in value and it's an asset that you own, whatever. Well, whole life insurance is very similar, where you can actually pay off a whole life insurance policy, yet the cash value and the death benefit will continue to compound in a tax advantage environment for the rest of your life and be there for you when you need it the most. All right. So I think that's an important part of whole life insurance for people to be aware of. With that said, how is this actually a lifelong benefit that we get? So we have this death benefit that we're absolutely going to get because this is a permanent life insurance policy, whole life is, versus term insurance that expires. We'll get into that later on when he starts bringing up certain points about that. But I would argue that there is absolutely a lifelong benefit to whole life insurance because one, it's an incredible legacy play. But let's get specific here, okay? How this death benefit is an actual lifelong benefit. All right, so when you're in retirement, so number one, this can serve, whole life insurance can serve as a phenomenal volatility buffer. All right, so a lot of people are contributing money to 401ks and stuff like that. And then oftentimes when people hit retirement, they start selling off assets within that 401k, within their portfolio to generate income. And they live by this, they stick to this 3 to 4% withdrawal rate, which I think is ridiculous, but I've done other videos on that. That's not the point of this video. All right. The problem is when you're selling off market assets, obviously the market doesn't go up in a straight line. It's going to have some corrections and we will experience down markets, right? Well, if you're selling off market assets during a downturn, then you're significantly reducing the longevity of your retirement portfolio. You do not want to be selling into a down market. That is not good at all. That can shave off decades, like years and years off of your retirement portfolio. So what do? Well, you should have some type of volatility buffer in place. Now, it doesn't have to be whole life insurance, but whole life insurance can be a phenomenal volatility buffer because it has nothing to do with the stock market. There is no volatility. In fact, it's guaranteed to grow every single year. Plus, it gets non-guaranteed dividends. These companies have never missed them. Some of them anyways. All right. And so what you can do is you can actually tap into the whole life insurance policy in a number of different ways to provide the income that you need for that particular year while you're waiting for the market to recover. All right. And then once it recovers, now you can resume selling off market assets to create income. It's not a great way to generate income, in my opinion, but that's that's one common scenario and one benefit of whole life insurance. Right. And so that I would consider that a lifelong benefit, being able to add a number of years to your retirement portfolio by tapping into it when the market corrects. I think that's a pretty good benefit. The other benefit, another one anyways, is a term called pension maximization. So because you know that death benefit is going to be there, either to pass on to your kids or to your spouse when you pass away, income tax free, and it completely avoids probate, because you know that's going to be there, what that does is it actually gives you permission to spend down more of your assets in retirement. It actually gives you permission to maybe get more income from a pension or an annuity or something like that. Instead of having the pension or annuity provide income on both you and your spouse, because you know that death benefit is going to be there for your spouse when you pass away, that means you could take more income from your assets, pension, annuities, et cetera, whatever it is that you decide to use, because that death benefit is going to be there to provide for your spouse, your loved ones, et cetera, right? So it actually gives you permission to spend down more of your assets. So those are just a couple of the lifelong benefits. I won't get into all of them. One I should mention too is that those chronic critical terminal illness riders on whole life policies can be a lifesaver, especially in retirement, because I believe it's 7 out of 10 people are going to need are going to have some type of long-term care event. Well, you could potentially be able to turn on those chronic critical terminal illness riders and accelerate the death benefit and get access to significant financial resources when you need it the most, right? So there's actually a lot of benefits to lifelong benefits that you get from whole life insurance. So we'll get into more detail on like comparing it to term life insurance and stuff here in a minute, but I just wanted to address that because there actually are a lot of lifelong benefits to this.
2, whole life builds a cash value that you can borrow against. The salesman like this one. It sounds sexy. This unique feature allows you to take loans from the money that is accumulated in your policy instead of using a bank. This is sometimes referred to as infinite banking or be your own bank, and it sounds attractive, right? It isn't, and I'm going to tell you why. And number 3, the cash value of a
Okay, so let's talk about that really quick. Cash value. Cash value is very similar to the equity in your home, where you could get a home equity line of credit on the house, and you could use that for emergencies, wealth building opportunities, etc. It's very similar with cash value. It's kind of like the equity in the whole life insurance contract. And we can use that for the same types of things: emergencies, wealth building opportunities. I use it for my policy. I use it to take advantage of wealth building opportunities all the time. I prefer to use it for real estate, but the benefit of that is I have my money growing in 2 places at once. And the only thing it costs me is a little bit of simple interest on the policy loan. Because what we do is we borrow against our cash value, like however much cash value we have, that's how much we could borrow against the policy. Again, that's the equity in the contract. But because we're borrowing the life insurance company's money, we're not using our own, our cash value continues to grow uninterrupted, roughly around 4% tax-free compound growth for the life of the policy, depending on what you qualify for, the type of product, how you design it and fund it, et cetera. It's usually what it averages, though, from an internal rate of return perspective. So my money is continuing to compound, but now I could borrow at, let's say, 6% on the policy loan, but then I can lend that out to my investor at 13% plus a point. I've done it 3 times now, right? So now I'm actually building wealth in 2 places at once. It just costs me a little bit of simple interest to do it. It's very similar to what a bank does when they pay us 1% on our savings accounts, but then they lend it back to us at 4, 5, 6%, whatever, for the car loans or the mortgages and stuff like that. It's like that 1% that they give us, it's just a cost of doing business. They're making way more than what they're paying us. It's very, very similar. So the cash value is actually a really, really powerful part of a dividend paying whole life insurance policy. And it can provide a really solid foundation. So I think it's based on my experience so far, it's pretty amazing.